You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun. Yeah, this is the show that connects the dots of confusion. Delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. A very focused show. We only talk about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest. Repeat offender on Ron Siegel Radio, Franck Bideau, Exchange Resources, is with us. Good morning.
Good morning, Ron. Thanks for having me.
Glad to have you with us. And if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls. I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, we're celebrating today. Get to know your customers day. Okay, I don't know why you need a national day for that. Shouldn't you be doing that every day? National Michigan Day. I don't know about that one either. It's cold there. Winnie the Pooh Day. Okay, I think the little ones still like Winnie the Pooh. I like the honey. Let's see. And to National Peking Duck Day. And I look at the Peking duck that we have here in the United States and compared that to the Peking duck that I had when I was in China. Well, the duck's looking right back at you. So, it's a little freaky when you have that. Different, but I digress. Let's move right along and see what's going on. The Dow Jones Industrial Average is down 83 points. S&P 500 is up 11.84. NASDAQ is up 130 points. Oil up $1.33 a barrel. And let's take a look at the 10-year Treasury. Up a little bit. I don't know if my eyes, my glasses are both out of whack. 4.14 on the 10-year Treasury right now. Watching that one is kind of fun. Taking a look at what's going on in the markets. A little bit of a roller coaster in the real estate world. We're seeing a little bit more inventory come. And if you watched the broadcast yesterday, we were talking a little bit about the idea, are we going to get to that fear of missing out? Kind of happens every once in a while when we start getting into these time frames, when we see interest rates, and we talk about this on a regular basis. Sometimes people will take heed of what we're saying. Kind of like gas prices. Interest rates go up in an elevator very, very quickly. They come down, escalator, maybe even stairs. They don't come down nearly as quick as they go up. Just the way of the world. And we're going to see that as interest rates start coming down. They don't come down as quickly, which is really a good thing. We always have to be careful because if they go up, if they come down too quickly, you might feel better, but it's unsettling for the market. And when you start seeing that unsettling taking place, you got to really worry because, believe it or not, if the interest rates come down too quickly and too many people refinance their loans after too short a period of time, it causes a lot of havoc in the industry. And you might say, Ron, I don't care about the industry. I care about my interest rate. And I agree. But what if there's no lenders to give you a loan? Well, then interest rates go up. And if you were watching our broadcast yesterday, we kind of talked a little bit about this. And I should have sent the slide over to Josh. We don't always I don't plan what I'm going to say on the morning broadcast, especially when it comes to my opening monologue. What I'm really talking about is, what just happened? What comes to mind? What are we thinking about? What are we doing? And I do that on purpose because I want the broadcast to be as authentic as I can possibly make it and as educational. And I get on a nationwide mastermind call each morning. Yes, I have no life, so it's about 6 o'clock. I've one at 5:30 a.m. California time and one at 6:30 a.m. California time. And we go on these mastermind calls and we start talking about what is it that's going on in the marketplace? What do we see in the interest rate world? And I just sent a picture over to Josh, so maybe, and I don't know if we'll even be able to get to show it, but it is a concept that we talked about a little bit yesterday. And the concept was about the spread on interest rates. Now, generally, there's a spread between the 10-year Treasury and a mortgage-backed security. And there's a fairly constant number that goes in there. Oh, and if we look at it, thanks, Josh. I appreciate you getting that up so quick. If we look over the last 50 years, that average spread is 1.72. What does that mean? So I just told you that the 30-year, the 10-year bond is trading at 4.145. 4.145 is the yield on that bond. Now, I'll still tell this to you. I multitask fairly well on the broadcast, but it's really difficult when you're dealing with numbers. So historically, again, over that 50-year period, the spread on between the 10-year Treasury and a 30-year bond is 1.72. That means we should be at a 5.86 interest rate, roughly, if we were following normal spreads. But we're not at 5.86, and we'll talk about where exactly is. But when we did this chart, the interest rate, there was a 2.78 spread. That's the important number. So we're comparing 2.78 versus 1.72. Even on the radio, I can do the math here. It's a 1.06 spread, greater than normal. So if we look at that 5.86, that means we're at 6.92 is where we are as of the time that this chart was made. Why is that important to you? Why is it important to look and say, why is the spread different? That's how the investors are going about protecting themselves from having people redo their loans too quickly. If we had a way of monitoring and making sure that the loans would not be replaced too quickly, we would be at closer to that 5.86 interest rate. And again, I'm not giving you APRs. I'm just using numbers from Freddie Mac. So don't get mad at me if you're a compliance person. I'm just using generic numbers, not making an offer to lend it anything like that. So when are we going to see that spread get back to a more normalized spread? Well, why is the spread that high? Well, investors, lenders, and it doesn't matter whether your name is Geneva Financial or Rocket Mortgage or Quicken Loans or John's Mortgage Company, they all make money based on selling servicing rights. It's a profit center for them. The people that buy those servicing rights anticipate that they're going to have a loan for 5.2 years. When they don't have the loan for 5.2 years, they don't make money or as much as they need to stay in business. So what do? Well, they don't pay as much for the servicing rights when you're in an environment where everybody knows, everybody expects interest rates to drop in a relatively short period of time. That's why we're looking at this spread that's greater than the norm. That's why that spread that's normally a 1.72 spread is now looking, where was I? It was about a 1 point or 2 point something or another. 2.86. Told you I don't script any of this. All right, so the bottom line there is, as time goes by and people start stabilizing in rates, as rates stabilize for a year or so, we'll see that spread narrow. And even if the 10-year Treasury doesn't go down, which it probably will, but not as quick as the markets want, we're going to see that compression get back to more to a normalized area, and that'll help interest rates and your home buying. That's why I say to you, Go to rsrnodebt.com, rsrnodebt.com. Now's the time to be restructuring your home loan and getting rid of your debts. We also have rsr2step.com, rsr2step.com. You do a cash out refi right now, get rid of all your debts, use up some of your equity. I know it doesn't sound good, but use up some of your equity. And then 6 to 12 months down the road, when interest rates are lower, we restructure again, get rid of the cash out finance charge, and you're going to be better off. That is why I say strategy beats rate always. Strategy beats rate always. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, what is a 1031 exchange and how does it work? We're going to talk about it. Three key factors affecting home affordability. We'll talk about that one as well. You can reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Hey, if you're listening to us this morning, give us a shout out. Say hello on the stream, on the chat box. We'll recognize you if you've gone to StreamYard.com/Facebook. StreamYard.com/Facebook. It'll tell us who you are. And love to say hi and thank you for being with us. Just give us a shout out. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990. 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, and timely interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates. They don't tell us APR, points paid, points received. They tell us locked rates with consumers across 42% of all mortgage transactions nationwide. Yesterday, rates locked. 30-year conforming loans, 6.709. Jumbo loans, 7.09. That was down yesterday. Surprise. 30-year FHA loan, 6.457. 30-year USDA loan, 6.511. Best loan on the market, down yesterday. 30-year VA loan, 6.214. If you want our commentary, our thoughts on what's going on in the market, every day as early as the data allows, every business day as early as the data allows, rsrmarketminute.com, rsrmarketminute.com, and we'll get that information out to you. That's what happened yesterday. Let's see what's happening today. The S&P 500 is up 13.2 right now. The 10-year Treasury is up 5 basis points, 4.15. Mortgage-backed securities are down 5 basis points. Remember, when the bond goes down, rates go up, but at 5 basis points, not enough to matter. What's driving all of this? Well, after our broadcast yesterday, we got the National Association of Home Builders Housing Market Index. Measures builder confidence rose 7 points to 44, remaining in contraction. Anything below 50 is in contraction there, so it's not growing. Increasing significantly to the highest level since September. All the internals rose with the future outlook looking bright. Current sales rose 7 points to 48. Future expectations rose 12 points to 57. Buyer traffic rose 5 points to 29. NAHB index is looking similar to the beginning of last year when it started to rebound, and that really picked up heading into the spring home buying season. Bottom line, it looks like the worst is behind us and things are set to improve in 2024. Housing starts and permits fell 4% in December to 1.46 million unit annualized pace. Starts are now up almost 8% year over year. Single-family starts, the most important part, fell 9% to 1.03 million units annualized, or up 16% year over year. Building permits, which is the future supply, rose 2% to 1.5 million unit annualized pace and are now up 6% year over year. Single-family permits rose 2% to 977,000. Completions rose by 9%. Remember, though, we're creating we need 1.9 million new homes every year. That's household formations. And we're building 1.57, less than 100,000 that need to be replaced because of obsolescence, 1.47 million, well below. That's like 25% less than what we need, which means if supply is below demand, which that it tells us it is, prices are going to stay stable or go up. Initial jobless claims measures individuals filing unemployment benefits for the very first time, fell 16,000 to 187,000, lowest level since the 60s. Wonder if that'll be revised. Yeah, I'm not going to even go there. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Let's chat. Let's learn. Franck Bideau is with us, Exchange Resources. Now, when you hear Franck speak, you'll know he came to us directly from Brooklyn so that you can educate us on 1031 exchanges. Good morning.
Good morning. Actually, I'm from Texas.
Texas. Oh,
Yeah.
okay. I was off by about 1,000
this is
miles.
a Paris in Texas. Do you know that?
Yes, sir.
Yeah,
Absolutely.
yeah.
Paris, Texas. Exactly. So 1031 exchanges is your expertise.
That's right. So let me ask you a question. What happened when you sell a highly appreciated investment property?
You pay a lot of taxes.
That's right. Now, the tax code has a nice little section called a section 1031.
Okay.
And that's going to allow an investor, as long as they sell that investment property and going to replace it by another investment property, they're going to be able to defer the payment of the capital gain tax, right? Not only federal, but state, depreciation recapture, and yes, the Medicare surtax. So, you're looking maybe 35, 40% you can defer as long as you're going to buy another investment property. What this means is that if I have $1 million gain, rather than paying $350,000, $400,000 in taxes, I'm going to be able to keep that money and reinvest 100% of my proceeds, therefore buying more real estate, better real estate, and build more wealth over time.
And the compounding effect is the thing that people don't usually think about.
Exactly.
So let's do a being that you brought it up that way, Franck. I want to do a little bit of a math 101 here.
Okay.
And I'm going to use really small numbers because big numbers just add zeros. We don't need to worry about that. So let's say we have $100,000 in a capital gain and 35% taxes. Let's just throw that number out there. We've got $65,000 left.
Yep.
Using the 1031, if we reinvest that 100,000, we have zero in taxes right now.
That's right. And again, the 1031 exchange doesn't eliminate the payment of the tax. Eventually, if you're going to sell that property without doing an exchange, you're going to be paying the taxes.
Sure.
But you can keep doing that indefinitely,
So now at the end of this transaction, I've got one account that's got 65,000 and one account that's got 100,000.
Yep.
Just so on our ledger.
Yep.
Now, if both of those grow at 10% in the next, say, 2 years.
Yeah.
Now I've got 110,000 and I've got 72,500.
That's right.
The compounding effect there is what's really massive.
Yeah. And then you also look at the tax benefit, right? Because the nice thing when you own investment real estate is that you can depreciate that asset over time, right? So you have those.
Okay, so I'm gonna get technical then.
Yeah.
And again, are you a CPA?
I'm not a CPA, by the way.
Good.
Yeah.
And I'm not a CPA. We don't give tax advice. So these are questions for you to ask your tax person. So that way we stay out of trouble.
That's right.
So we don't have to worry about if I've got that property that I was selling, if that was fully depreciated.
Then you have zero write-offs, right?
Zero write-off on that.
Yeah.
Now I go and I buy a new property through the 1031 exchange process. Can I start depreciating the new property?
So then you would start a new depreciation schedule. And depending if you have depreciation left over from the previous property, you may add another depreciation schedule or start fresh. But, let's say you own a property that's worth 100,000. You have no depreciation on it. You're getting zero write-off. But now if I use that 100,000, buy a property that's worth 500, and let's say you only depreciate the building, right?
Right.
Not the land. So let's say if I take 300 of that and depreciate that, that's quite a bit more, money. So
Sure.
It's more compounding as well and higher.
So the bottom line is that if you've got a fully depreciated property, you want to be talking to your tax people about saying, does it make sense for me to go and sell that and buy something new?
Exactly.
Now, this is the time of year to have those questions ready. I know a lot of tax people want to get you in and out because they're so busy. But the bottom line there is have your questions ready. That way you're not using any more time than you have to, because tax planning is not done in March and April. Contrary to popular belief, that's when tax reporting is done. Tax planning is done the other 7 or 8 months of the year when you can really sit down and make a game plan. So why doesn't everybody just do this 1031 exchange?
It's surprising. I mean, some people are not aware of it. I think there's an education problem.
Okay.
And some people just want to, cash out. So and let's face it, some people.
It's easy.
Yeah, it's easy, right? Or some people may just want to retire from managing properties, not knowing that there are other vehicles that they can invest into that they could exchange into. I'm thinking of those Delaware statutory trusts, which are more like a securitized type of investment, but the IRS has blessed exchanging into. We don't sell those. You have to be licensed to sell those, but that could be a great investment type for people looking at exiting management. But it's interesting to see, and a lot of people are making that mistake, Ron, is that you have owned your investment property for like 20, 25 years, right? And you have so much equity in it. And then let's just talk about depreciations, right? You basically are depreciated, close to zero, when you have held that property for so long. But taking that equity and reinvesting that in a, larger property, just on the depreciation side, I mean, that's a huge benefit. Massive, right? So I think a lot of people are making that mistakes to hold on to their property too long and not, using that equity, using maybe a little bit of leverage, reinvesting in larger, better properties, better return, and also those potential tax benefits. So,
and there's several components to return, right? So you've got the appreciation as one component, and the write-off is the other side of your balance sheet.
The write-offs, and you have you as you're paying your loan. I mean, it's like you're putting money into your saving account, right?
Sure.
And hopefully that property is going to pay for itself. So you have that component as well, and then of course the return. And so when you combine,
let somebody else make your mortgage payments.
Yep, exactly.
Great stuff. We're going to continue our conversation. There's a bunch of questions that we hear all the time. Timing. Can you do it? Do you have to do it right away? Do you have to wait? What are some of the timing issues? Can you buy before you sell? Do you have to sell before you buy? Equal or greater value rules. There's a whole lot here, and we're going to get them all answered from Franck when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. 3 key factors affecting home affordability. We'll chat about that as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694552.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Hey friends, do you dream of mortgage-free home ownership? Are you aware that even if you own your home free and clear, it could still be costing you thousands per year? The Siegel Lending Team can help you generate tax-free income, accumulate family wealth, and maintain ownership of your home. By simply emailing your most recent mortgage statement, you'll receive a no-obligation real estate plan. Learn more by calling 1-800-306-1990 or email me your recent mortgage statement to PEAR@RonSiegelRadio.com. Licensed under NMLS 217037, Equal Housing Lender. Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio anytime. At 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. 3 key factors affecting home affordability over the past year. A lot of people have been talking about housing affordability and how tight it's gotten. But just recently, there's been a little bit of relief on that front. Mortgage rates have gone down since their most recent peak in October, but there's more to being able to afford a home than just mortgage rates. To really understand home affordability, you need to look at the combination of three important factors: mortgage rates, home prices, and wages. Let's dive into the latest data on each one to see why affordability is improving. Number one, mortgage rates have come down in recent months, and looking forward, most experts expect them to decline further over the course of the year. Jay Zhu, an economist at Realtor.com, explains, quote, while there could be some fluctuations in the path forward, the general expectation is that mortgage rates will continue to trend downward as long as the economy continues to see progress on inflation, unquote. And even a small change in mortgage rates can have a big impact on your purchasing power, making it easier for you to afford the home you want by reducing your monthly mortgage payment. Number two, home prices. The second important factor is home prices. After going up at a relatively normal pace last year, they're expected to continue rising moderately in 2024. That's because even with inventory projected to grow slightly this year, there still aren't enough homes for sale for all the people who want to buy them, according to Lisa Sturdivant, chief economist at Bright MLS, large MLS. Quote, more inventory will be generally offset by more buyers in the market. As a result, it is expected that overall, the median home price in the U.S. will grow modestly, unquote. That's great news for you because it means prices aren't likely to skyrocket like they did during the pandemic, but it also means it'll probably cost you more to wait. So if you're ready, willing, and able to buy, and you can find the right home, purchasing before more buyers enter the market and prices rise further might be in your best interest. Number three, wages. Another perspective factor in affordability right now is rising income. The graph that we've got shows you rising income and how, from the Federal Reserve, how wages have grown over time. And if you're watching us on RonSiegelRadio.tv, any of our socials, the ABC News and Talk AM 1490 video feed, you see the chart. And you can see wages index to the trend line is the blue dots. The wage index is the green line that shows it's above that dotted line. If you look at the blue dotted line, you can see the rate at which wages typically rise, but on the right side of the graph, wages are above the trend line today, meaning they're going up at a higher rate than normal. Higher wages improve affordability because they reduce the percentage of your income it takes to pay your mortgage. That's because you don't have to put as much of your paycheck toward your monthly housing cost. What this means for you? Home affordability depends on three things: mortgage rates, home prices, and wages. The good news is they're moving in a positive direction for buyers overall. Bottom line, if you think about buying a home, it's important to know the main factors impacting affordability are improving. To get the latest updates on each, give me a call at 800-306-1990, 800-306-1990. That is the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com. Continue our conversation this morning. Franck Bideau from Exchange Resources is with us, talking about 1031 exchanges. If you are contemplating investing in real estate, and you should be. Do you want to pay taxes? And you should not be. Well, there's some people, I guess, that like paying taxes. If you do, let me know if you get a thank you note from the government. I don't think you're going to, but maybe you will. But here's the issue. Regardless of the time frame, and I just saw this on one of the social channels this morning, drives me crazy when people say, well, the stock market goes up faster than real estate. Not true. If you really want to look at an investment standpoint, because the stock market, for the most part, doesn't have the leverage effect. If you were to put 20% down, which most people do not, they put less than 20% down. That means whatever the rate of return is. So the real estate, if it goes up 5.8%, I think is what it's going to turn out to be for last year. We haven't got the December numbers all in yet. 5.8%. If you put down 20%, that means you take that 5.8 and multiply it times 5 to get the return on your capital. if my math is correct, that's about 29% rate of return. Was the stock market up 29% last year? And could you live in it? Because you got to have a place to live too. Just throw that out there for you. Now, if you're an investor, properties that are not being lived in, well, how do you get your money out? Well, you sell, or but that doesn't work because then you got to pay taxes. So you trade. 1030 or exchange is what Franck is talking about.
Right.
So now if we exchange a property, say I've got a 4-bedroom, 3-bathroom, single-family home, and I trade that in for a 4-bedroom, 3-bathroom, single-family home. I don't get to take any money out of that, right? When I do a 1031 exchange?
No, you have to reinvest everything.
Reinvest everything.
Yep.
Once I've reinvested everything, can I refinance that property down the road sometime?
You could. Now, again, you would want to talk to your tax advisor. You don't want to do that too early, right after. You want to give it a little time, season that that exchange. But you could, pull some money out at one point and maybe reinvest into something else.
Buy another 4-bedroom, 3-bath, single-family home.
Something like that, perhaps.
Right?
Yep.
Because that way you can leverage and maximize your growth potential.
Yep. Exactly.
Right. So and the other part of it is if I buy it today. And I don't know what interest rates are. I'm going to throw a number out there and say that they're at 7.5 on a non-owner occupied. I don't know. It could be 6.5 for all I know, right? And interest rates drop next year. Does it affect my 1031 at all if I refinance and just do a straight no cash refinance?
No, it does not, because you're not selling the property. You're just refinancing.
Yeah, you're just refinancing it to make more money.
Yeah.
Right.
So you're going to improve your return over time. Yeah.
So the bottom line is now you're taking that $4,000 a month payment that your mortgage payment, and maybe you're going down to $3,000 a month.
So
but your rent, so your spread is better, and your rent only goes upward because we rarely have negative rent returns on rent.
Yep.
Right. So instead of going, if you were renting it for $5,000, I'm just throwing out numbers. Don't use the exact numbers. So you were making $1,000 a month was your gross. Now you're making $2,000 a month.
So you're increasing your return by maybe picking or reinvesting in a better, larger property.
Right.
Yeah. And by the way, you say something interesting, right? If you put 20% down on a property, the rate of appreciation, you're not only appreciating on that 20% down you're putting, you're appreciating on 100% of the value of the property.
Right.
So having some leverage is kind of neat, right? So you can spread that equity that you may have buying a couple, properties and getting the return not only on that initial investment, but the total value of the property over time.
So let me ask you that question in front. If I have a $500,000 in equity on my departing property, in a 1031 exchange, can I break that up into 2 different properties at $250 each or whatever the multiples?
You could, but something that to remember too is that in order to have a good exchange or defer 100% of your capital gain taxes, is that you have to replace the value of the property, right? Not just the gain. So if I sell a property that is worth $1 million, I have to buy equal or greater to $1 million. Actually, to be a little more specific, it will be the net sale price because you can deduct some of the non-recurring closing costs like commissions. But to keep things simpler, you sell for $1 million, you have to buy equal or greater to $1 million to defer 100% of the taxes. If you buy for less, let's say you buy for 900, then you would be paying the tax on the differential of the 100K that you're not replacing. So you have to replace the value, the sale price, not just the gain or the equity. That's very important, right?
So there's strategies for that also. And I'm going to throw this strategy out at you, Franck. So I go and I find a $950,000 property. I've got $1 million property. I go and I find a property for $950,000. Can I go to the seller? Because we do this, for single family owner occupied all the time. Can I go to the seller and make the seller an offer of $1 million and ask him to use that other $50,000 to buy down the interest rate?
You couldn't, because that would be considered boot. You cannot have any credit. So you have to be careful how you structure that. You
can't use an interested party contribution.
Yeah, you cannot use that. It's not part of the non-recurring closing cost, right, to come to the value. So giving a credit or getting a credit could affect your your boot, as we call it, the
Okay.
taxable portion of that exchange. So you have to be careful. I would talk to your CPA, to make sure that you structure the deal, correctly.
And that's a key thing on all deals. We highly, highly recommend, if you're an investor, make sure that you're structuring the deals and have a good, I call it your household board of directors. You've got your realtor, you've got your lender, you've got your CPA, you've got your attorney. You may need a real estate attorney. You definitely want to make sure it's in a trust. If you're buying investment property, it needs to be in a trust. You've got to have Franck on your team to be helping you with the 1031 portion so that you do that properly. It's not like you just go to your escrow officer and say, I want a 1031, and it's that easy, right? You need to have
There are some rules to follow, and that's what we are here to help people go through that and strategize. We set forward, provide people with the guidelines, what they cannot do. Like we talk about, it's always important to refer to your tax advisor, your attorneys, but we can provide some general information on how to go about it. But I like to go back to your example, and that's kind of, I kind of think it's kind of cool. So you're selling $1 million property, right? Let's say it's all you don't owe anything on that property. So you have $1 million in cash on hand. Then you go out and buy 2 properties. So you can sell one and buy 2, right?
Sure.
But maybe you're going to finance 50-50 on each of those properties. So now for that $1 million, you're going to buy 2 $1 million property. You put down $500K on one, $500K on the other. You finance, $500 on each. So now you made from that $1 million, you got $2 million. Now you're going to appreciate on those $2 million, right? And then you're going to have the benefits of depreciations as well, and the ability to diversify and enhance your portfolio.
And now think about it. If you had a property that was appreciating at 5%, so 5% on that $1 million, $50,000.
No, I bought 2 properties for $1 million each.
No, I'm saying
Yep.
I hadn't got there yet.
Yeah, okay.
You're right. $5 million on your departing property.
Yeah.
Now you bought $2 million worth of real estate at 5%, and so you've got $100,000 in appreciation by itself. Obviously, you have to take off your cost of financing, but you've only financed 50% on each one, so you're going to have a low number there.
Yeah, and again, like you said, right, you make your money in real estate by the appreciation of the property, right? The return on that investment, your cash flow, right? And then you also have the tax benefits, like your depreciations, right? So when you add all of those benefits combined, then
I didn't even say that.
Yeah.
So when you had your $1 million property that you were depreciating, maybe now you've got $2 million that you're depreciating. And what is it, 27 years? Is that?
So it depends on the type of properties, right? So for residential, you depreciate over 27.5 years, commercial, 39 years. And you have some variation in between if you accelerate your depreciation and so forth. But, as
you can help a lot to get rid of your ordinary income even, or the.
So if you're in a higher tax bracket, right, then you may need those write-offs every year.
Big time. We're going to continue our conversation with Franck Bideau, Exchange Resources. Hey, if you're watching us, say hello in the chat so we know you're there. We appreciate it. We'll be back in just a couple of seconds. So you can reach me anytime. Our off-air number again, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com. Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at ronismylender.com. That's ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender. Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender.
Hey friends, do you dream of mortgage-free home ownership? Are you aware that even if you own your home free and clear, it could still be costing you thousands per year? The Siegel Lending Team can help you generate tax-free income, accumulate family wealth, and maintain ownership of your home. By simply emailing your most recent mortgage statement, you'll receive a no-obligation real estate plan. Learn more by calling 1-800-306-1990 or email me your recent mortgage statement to PEAR@RonSiegelRadio.com. Licensed under NMLS 217037, Equal Housing Lender.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. We're continuing our conversation this morning. Franck Bideau, Exchange Resources. We're chatting about 1031 Exchange this morning. We're learning about them, and it's a tax planning strategy. It is not a gimmick. It is not something new. It's been around a long time. Totally legal. We don't talk about illegal stuff on Ron Siegel Radio. I don't believe in that kind of stuff. We want to make sure that you're doing it the right way. And the 1031 can be, is intimidating a good word for somebody, for the ignorant person?
I mean, when you first look at the rules and things, it can be, oh, what am I getting into? But again, it's why you have professionals who can help people, through the process. And
knee replacement is intimidating too.
Exactly. You're not doing it yourself, right?
You don't want to do it yourself. Yeah, you can look it up online, and you're probably not going to have a good outcome.
Yeah.
So that's why you want to have a professional that understands that's dealing with 1031 exchanges all the time. And we talk about reverse mortgages on Ron Siegel Radio, but there's something called a reverse 1031 as well. Can you explain that a little bit, Franck?
Sure. So you have different kind of exchanges, and we do all of them at Exchange Resources. But so your typical exchange, you're going to sell your property first, and you're going to buy the replacement property later, right?
Well, you have a certain amount of time, right?
And you have, exactly, right? So you have basically, to make the whole thing happen, you have 180 days, so about 6 months from the time you close escrow on your sell property. You have a 180 days, 6 months to close escrow on the replacement property. And you have some identification, for the replacement property you have to do as well. Now, a reverse exchange, it goes in reverse, right? So why would you use a reverse exchange? Well, you would use that, especially in a market like today where the inventory might be a little bit lower, or you find the right opportunity and you want to buy the property, the replacement property first before you sell what you have to sell, or just because you may not have the time to sell the property you have to sell before you complete, your purchase. So you would go the reverse strategy. So you would purchase the replacement property first, and then from the time you acquire that replacement property, then you're going to have 6 months or 180 days to sell the property that you want to sell. Now, the reverse exchange is one of the most complicated exchange in the tax code, right? So there's a lot of moving parts and things like that.
Yeah,
but that's in a nutshell, how it works, and that's a great tool in a market like today. Right?
I would say this is probably the right market for that,
Yeah.
because it's not outrageously difficult to sell a house right now, right? If you price it properly,
exactly,
it's going to sell.
Exactly.
So finding one is more difficult.
It's more difficult. I mean, it's not uncommon to get to a property and you have multiple offers and you're not sure if you're going to get it, and, price the way they are and so forth. I mean, that can be a challenge. So it gives you more time to go and find the replacement. You're not constrained by the 45 days identification.
And you don't have to worry about the 45-day identification number is already done, because you know what the other property is.
Yeah, typically that's right. Yeah,
because it's now what happens if you don't get in the reverse. If I'm doing a reverse exchange and I've bought a new property and my departing property doesn't sell,
then you just
keep on going. You own two properties.
You don't have to sell it. I mean, you keep your property, and you just it costs you the cost of doing the exchange.
Okay.
But you're not.
Are doing exchanges expensive?
It depends on the type of exchanges.
Okay.
But it's a very small fee when you look at what it would cost in paying the taxes.
Yeah, you can, and it's funny how it amazes me sometimes how people can, to jump over dollars to get to nickels, right? They worry about the cost of the exchange, and I see the same thing when I talk to people about doing some of our business owner home loans. They say, well, the interest rate is 2% above what I'm hearing on TV. Well, yeah, but you're saving 30% on your taxes, right? So if you can save 30, and the same thing that you're talking about, okay, so if I have to pay, I don't know, 2, 3, 5, I don't know what the number is, doesn't matter, cost a percent for the exchange, and I'm not paying 40% in capital gains or 20%. You can tell I'm not a tax guy, but I'm not paying the capital gains on it. The delta between the two can be massive.
Exactly. So you have to look at the opportunity, right? Do your numbers. So obviously a reverse exchange, because it's more technical, it's more involved, it costs a little bit more. You have to do an analysis, right? Does it make sense to do it? But we are not looking at tens of thousands of dollars here, right? So the fee is relatively small compared to what the benefits are. So,
and again, the whole idea here is you want to make sure. Again, it's like saying, I want to go to the cheapest cardiologist I can find. No, I want to go to the best one, right? I want the best outcome. You could probably find and when all you think about is price, I guarantee you're going to find somebody that's more expensive than Franck and somebody that's going to be cheaper than Franck. Just the way the world works, right? But you want to go to somebody who has the experience and knowledge of Franck and his company, because
we are celebrating our 25th year in business this year.
25th year.
Yeah.
Okay. Holy cow. I think about half those years I've had you guys coming on as a guest on my radio show. Almost half.
Yeah.
I'm 13 years doing radio. So we've been doing the radio, and I know that you and your partner have been coming on for a long time.
Yeah.
So you want to make sure that you're getting involved with people that really, really know what they're doing and know the right answers and questions, because even though Franck, I'm sure, knows the vast majority of the tax answers, he's going to give you the questions to ask your tax advisors, because that's what they get paid to do. They go to all those hours of continuing education So you want to make sure you've got both parties on your team.
Absolutely.
You want the exchange resources and Franck and his group, and you want your CPA. And if you need help with finding either one of those, I know where to find Franck. That's easy. And I know several CPAs that understand this stuff as well. Call me at 800-306-1990, 800-306-1990, and we'll put you in touch. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime. 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
I think I'll just call it a day.